Okay, well, very good morning to everybody, and thank you for joining our webinar this morning. Welcome to Condé Mathias, and as you can see that this webinar is all about company cars. I'm delighted this morning to be joined by our presenter, so welcome Kathy. Kathy Martin is Tax Director here at Condé Mathias, and she's going to take us through everything we need to know about company cars, tax and electric vehicles. Just a couple of housekeeping points before we get going, and I'll hand over to Kathy. We will be recording this webinar, so we'll make a copy of the on-demand version available on the website later on today. So if you do need to recap on any of the points that have been made, then please refer to that recording. And if you've got any questions that you'd like to put to Kathy after this webinar, I have been given her permission that you can email her directly at kathymartin@condemathias.co.uk with any questions that you may have in relation to company vehicles, and Kathy will be happy to take those questions by email from you. Okay, so let's get started. I'll hand over to you now, Kathy. Thank you.
Lovely, thanks, Jo. Good morning, everybody. Thank you for attending today's session on the presentation of company cars, and I hope you enjoy it. So if you were thinking about how to run cars and vans through a business, there are many personal tax issues to consider. Hopefully in this presentation, we'll help you decide on the best option for you. If you are driving a car provided by your employer and it's available for you to use personally, it's viewed as a taxable benefit. HMRC attaches a monetary value to the private use of the vehicle and collects tax on it. This is what we officially know as a benefit in kind. There are two separate benefit in kind tables. There's one for cars which are registered after 6th of April 2020, and then a different one for any other vehicle registered before that date. The calculation of the tax is based on the CO2 emissions of the car, combined with some other factors, mainly being whether there are any other non-taxable items, e.g. road tax, and also optional extras. So the list price is normally the first point of call that we use for calculation of the benefit in kind, plus optional extras. Then the rate of tax you pay at your marginal rate on other annual income then determines how that benefit in kind is taxed. And then also there could be another benefit in kind on the type of fuel the car runs on. The easiest way to work out how to pay tax is by using an HMRC their own tax calculator, which is very easy. You put in all the details, plus any other tax reducing factors. Maybe you may have contributed to the initial cost of the vehicle. Maybe you haven't had the use of it for the entire tax year. Putting all those details in, HMRC will calculate the benefit in kind for you. So the three steps that you'll need to actually use to calculate that benefit in kind. One, determine the car's list price, which will be its P11D value. That's normally very easily found from looking online or from the dealer where you've actually acquired the vehicle. You multiply that by the company car tax rate, which is based on the CO2 emissions. That's what's classed as the benefit in kind value. And then you multiply that by your personal tax rate, which is either 20%, 40% or 45%, depending on obviously what other annual income you have in the tax year. The tax bill on diesel cars will typically be more expensive. There is normally, at the moment, there's a 4% surcharge. Because of their lower CO2 emissions, hybrid cars can be a great alternative. And they will fall into a lower car tax band. So now we're going to just have a look at personal tax on the company van benefit. If a vehicle is classed as a van, the benefit is taxed slightly differently compared to a car. Instead of a list price and the CO2 emissions, there's a flat rate figure that HMRC provide, and that is then used to calculate any benefit. There is also the option of a zero emission van. This is even a smaller taxable benefit in kind compared to a standard company van. If your employer is going to provide fuel for you for the company vehicle, this will give rise to a completely separate taxable benefit in kind. This is based on a flat rate figure. And again, it's very much dependent on the CO2 emissions of the vehicle itself. If the fuel's for a company van, again, there's a standard rate figure, much like the van benefit itself. If you're using the vehicle for genuine business trips, which can be either using a company car or your private car, your employer can reimburse you by using HMRC flat rates. According to HM Revenue and Customs, trips are seen as business related when the work can't be done unless the trip is made and the employee needs to be somewhere other than the usual workplace to carry out the job. These are different rates depending on whether you're using your company vehicle or a private vehicle. It's worth noting if your employer reimburses you below these amounts that you can make a separate claim for the additional tax relief on the difference. Likewise, if your employer reimburses you above the HM Revenue and Customs flat rate amounts, then the difference will be subject to income tax in full. So let's look at now ways of buying a company vehicle and what the different tax aspects of those are. So for an employer, whether the vehicle is leased or purchased may have substantial differences to the amounts of tax relief obtained. In either situation, the benefit in kind position for your employees is not affected at all. So if you purchase a vehicle, you will be able to claim what's known as capital allowances on it. This is a set percentage that can be offset against your profit and is dependent on the vehicle's CO2 emissions. If you're buying under a hire purchase, legal ownership of the vehicle passes to the company at the date the contract is signed. You will then simply pay for the asset over a period of time, normally on a monthly basis. The monthly HP repayments will contain both an interest and a capital repayment element. The capital element is not an allowable deduction against business profits, but the interest will be. You will, however, be able to claim capital allowances on the capital element of the repayments, similar to if you would purchase a vehicle outright. Leasing vehicles. If you're going to have a vehicle on a lease, there are usually two different types, an operating lease or a finance lease, and both are treated slightly differently. An operating lease is where the business simply pays a rental payment to the owner of the asset. All the expenses incurred can be offset against business profits. A finance lease is where the business is required to treat the lease in the same way had it bought the vehicle by way of a loan. The business will therefore depreciate the asset over its normal life and will charge depreciation and interest payments against business profits. This is one of the only times a business will get a tax deduction for depreciation. In either situation, the asset is being borrowed from somebody else, so no capital allowances can be claimed. Where the vehicle in question has CO2 emissions of 50 grams or more, only 85% of the lease costs will be allowable. So there's a slight discrepancy on what you can reclaim of those costs. If your business is VAT registered, then you can reclaim the VAT, but only 50% relating to the lease of the vehicle costs. So now we'll look at a bit more detail on electric vehicles. With the sale of petrol and diesel cars set to end by 2030, as you can imagine, there are obviously going to be a bigger demand for electric vehicles. And again, with rising fuel costs and the ongoing threat of climate change, there are quite a few people now that are more interested in considering changing to an electric car. But obviously, before they do that, they want to make sure that they're clear about the tax implications. particularly on the purchase, maybe a hire purchase or PCP or lease arrangement. So one of the questions is, will I be able to claim capital allowances on the purchase of an electric car? Well, the answer is yes, but the arrangements are different from those you can claim for petrol and diesel vehicles, and the amount you can claim will be reduced, again, by any personal use. Unlike other cars, electric cars qualify for first-year allowances. That means you can deduct the cost of the car from your profits before tax in the accounting period during which you purchased the vehicle. If you also use the car for personal journeys, you will only be able to claim a proportion of the time you use it for business journeys. That means if you use the car for personal journeys, say 10% of the time, you will only be able to claim 90% of the cost of the car in capital allowances. This is only the case for sole traders and partnerships. It's not the same for limited companies. Because you are likely to be able to reduce your pre-tax profit significantly, you may want to consider in which tax year you make the purchase. The benefits may be greater, clearly, in a year where you have higher income. You can claim capital allowances when buying outright or where a hire purchase agreement is in place. Should you subsequently sell the car, however, please remember that there will be a tax charge on any amount received. So, can you reclaim VAT on the purchase of an electric car? As a general rule, no. You can't claim VAT on an electric car or on an ordinary car, petrol or diesel, unless you can definitely say you're using the car 100% exclusively for business use, which is highly unlikely. Therefore, only businesses where they have pool cars or perhaps a taxi are usually able to claim 100% of the VAT back. So what about personal contract purchase? So personal contract purchase finance deals are a very popular way of purchasing a vehicle nowadays, often consisting of a modest initial deposit, followed by a series of comparatively low monthly payments. At the end of the term, you will generally have the option to either trade the vehicle in for a new one on a new contract, or to make a balloon payment to own the vehicle outright. However, crucially, PCP arrangements will usually be considered to be a finance lease, and so they would not normally qualify for the first-year capital allowances. As a result, there can be significant tax advantages to opting for a hire purchase agreement rather than a PCP arrangement when you're thinking of buying an electric car for your business. That said, there are some limited circumstances where the detail of a PCP agreement means it would be eligible for first-year capital allowances. This can be the case where the balloon payment element is below the expected future market value of the vehicle. So I would urge you to seek tax advice if you're considering any of the options, particularly to make sure that you're using the right agreement with a view to claiming capital allowances. So what if you lease an electric car? If you lease an electric car, you can deduct the cost from your taxable profits, again, on the proportion of your business use. While this route allows you to spread the cost, you obviously lose the significant tax benefit that comes with the first-year capital allowances when purchasing an electric car. Nonetheless, there are benefits to leasing rather than purchasing. For instance, current battery technology means that performance does degrade over only a few years. So batteries, being a significant element of the overall cost of the vehicle, will need replacing probably reasonably quickly. If you're leasing the vehicle, obviously you avoid the issue of having to replace that. What about reclaiming VAT on the lease of an electric car? So with any VAT on a lease agreement, there is a 50% block on input tax recovery if the car is available for private use. whether it's electric or not. So that's just the general rule. If it's not available for private use and purely for 100% business, then yes, 100% of the VAT may be reclaimed. For VAT purposes, obviously the rules are no different whether the car is electric or not. Now, what about mileage claims for electric cars compared to obviously where we are with ordinary diesel and petrol cars? If you're leasing the electric car through your business, you can't claim the mileage rate at all. It's different if it's a car provided by your employer, where you can claim 5p per mile. However, if you pay for the lease or own the electric car personally, then you can still make a relevant mileage claim based on a rate of 45p or 25p, depending on the number of miles you're doing in a tax year, irrespective of the fact that it's electric. If the vehicle's charged at home, you can claim 5p a mile, even if the business pays for the lease. How about charging points? What's the position on those? So you can claim back the VAT element of a charging point if you are registered for VAT. You can also deduct the cost of a charging point in proportion to your business use. If you have business premises, the government offers a scheme to help with the cost of the installation of electric car chargers at those premises. And there is a link that will be in the notes that you can follow just to see if what eligibility you have to meet. So more detail about the electric cars and vehicle tax, road tax. So these are exempt from vehicle excise duty, meaning at the moment that they're currently free to tax. Electric vehicles will be charged vehicle excise duty, but from April 2025 onwards. However, don't confuse this with the benefit in kind rate, which increased to 2% in the current tax year, 22-23. And with the budget changes announced recently, there will be further increases for the electric vehicles by 1% in 25-26, then a further 1% in 26-27, and then again by another 1% in 27-28. And that will bring the benefit in kind rate up to a maximum of 5% for electric cars by 2028. Please also note that electric cars are exempt from the congestion charge, and company cars which have to travel in and out of cities will hugely benefit from the additional savings there. So other benefits when using electric vehicles. As I've said, the congestion charge, there are congestion charge exemptions. So electric vehicles are exempt from the congestion charge and clean air zone charges. Electric charge points and charging costs. Any business that installs charging points for electric vehicles between now and March next year can claim 100% first year allowances for these costs. Electric vans, the taxable benefit for having the private use of a zero emission van were reduced to nil from April 2021. The previous year, electric vans were taxed at 80% of the benefit for a normal van, so clearly there's a big benefit there. Salary sacrifice. So when an electric car is provided under a salary sacrifice arrangement, that's perfectly acceptable, and it won't be classed as part of the optional remuneration rules. There, so I think that's given you hopefully a flavour of company cars. Again, if you would like to have any questions that you've noted down and you would like some responses from me, then please feel free to email. My email address is obviously at the bottom on that slide, and I will get back to you as soon as I can. Many thanks for watching.